So, the most recent CPI inflation report was just released this morning, and in my opinion, it just made Jerome Powell and the Federal Reserve's job much easier because it basically flipped what is currently happening in the market. If you hear pitter-pattering around, it's my puppy. She has a lot of energy today. But on top of that, I also think that it solidified the chance of an FFR, federal funds rate, interest rate cut for the next meeting, which is just around the corner. I also want to explain why you're seeing such very different headlines. You're going to see headlines today that are saying inflation is horrible. This is the worst inflation reading in 6 months. And then on the other side, you're going to see headlines that say inflation is great. So which one's right? Which headline is right? Well, there's an explanation for that as well. So without further ado, let's talk about all that. As always, my name is Derek. I got my degree in finance, so you don't have to. Let's start with the varying headlines because that ties into the actual numbers. So the headlines are saying this is the worst inflation reading in 6 months. Why are they saying that? Well, because the core metric of CPI, which is what the Federal Reserve cares about more. Remember, the core metric removes volatile assets, that is food and energy prices. That did tick up. So it ticked up from 2.9% year over year last month to, again, we're back over 3%. So it ticked up to 3.1%. That's not good. Okay, that's not good. With that said, the headline, what's known as a headline number, headline CPI, which includes gas, energy prices, gas prices, as well as food prices, that remained flat. That remained flat at 2.7%. Now, there was expectations that it was going to tick up. So that's the positive. Now, remember, these volatile assets, you and I feel. We feel it when we go to the gas station and we fill up our cars. We feel it at the grocery stores. So it is an important number. With that said, the Federal Reserve cares primarily about the core metric. And the core metric did tick up, although it didn't tick up as much as expected. Analysts' expectations was significantly more. Why? Well, because of tariffs, right? Tariffs are starting to hit in the inflation number, especially now that services inflation is not holding down the core metric. With that said, this, in my opinion, was not a bad reading. And when you couple it together with the horrible jobs report, remember, we just had a jobs report like a few days after the Federal Reserve met, about a week and a half ago. They met. They didn't change interest rates. And then like the day or the day after that, we had this horrible jobs report, which made their decision look like the wrong decision. Remember, only 73,000 jobs were added. Over 100,000 jobs were expected. Plus, May and June, those numbers for the jobs market, those numbers were revised down by over 250,000 jobs, just leaving 30-some thousand jobs for those 2 months, which is technically negative job growth because you need close to 100,000 jobs per month just to keep up with population growth. So when you couple all that together, what's going on? Why can I confidently say that Jerome Powell is going to cut rates in September? And if he doesn't, it'll be at the next meeting. But I would bet money that he's going to cut it in September. Now, the reason for that is because, remember, they have a dual mandate. So maximum employment, price stability. Up until this point, you had a great, strong job market, at least on paper, and you had inflation that wasn't down at the target level of 2%. I always say this when I can because it's hilarious. You know where that 2% number comes from? It comes from a random interview with an economist in New Zealand from the 80s, and there's like zero basis as to why we all go for 2%. But that's the number that everyone picked. It's high enough to leave a buffer in times of economic recession so the Federal Reserve can react. Okay, so back to this. So up until now, we've had the opposite. Interest rates should remain high because we're still fighting inflation and the job market is strong. Now you have basically, in a matter of days or weeks at the longest, you have, sorry, I'm just making sure my puppy is not chewing on something she's not supposed to. Right now you have basically the opposite. In just a matter of days, it flipped. So now you have a job market that is looking way weaker than expected, and you have inflation that is not moving up as high as economists, myself included as a finance professional, and other finance professionals had thought it would move because of Trump's tariff war. Now, the explanation for this is you could have a couple things. One, the next inflation reading could be horrible, right? That's always a thing that could happen. Same with the jobs report. All of a sudden, boom, horrible jobs report. Secondly, it's also because the tariffs have not actually gone into full effect. There's always pauses, delays, and they're never at the top rate that that Trump said they would be. So when you couple all this together, you're not getting the massive impact of inflation that a lot of economists, finance professionals, and hey, I'll even say it, myself included, I thought we would have had way more inflation at this point. With that said, the core number is already back up above 3% at 3.1%. And just to put that into perspective, that is 50% above where the Federal Reserve wants it, which is they want the core metric at 2%. I'm sure they will take any metric at 2%, but they want the core metric at 2%. So when you couple all this together, you have the opposite thing happening right now than what was happening up until this point for years, basically. And because of that, it would be very odd and it would be very difficult for Jerome Powell to justify in front of everybody that they're not going to cut interest rates again. Now, of course, remember, this is a vote. So other members are going to vote. And remember, just this most recent meeting, we already had 2 dissenters who would have cut interest rates. So, and I hope I said cut, not raise. But it would be very hard for Jerome Powell to justify not cutting interest rates at the next meeting. And in my opinion, they're going to cut. If I had to guess, they're going to cut twice at the minimum. They're going to cut twice. They're going to cut in September and they're going to cut either at the following meeting. And I think they have one more meeting after that for this year. They're going to cut. When you look at the CME Fed Watch tool, it says the same thing. I mean, it would be very odd for them not to cut interest rates. In my opinion, it's going to be twice. Some people say it's going to be once. In my opinion, it's going to be twice. And it's going to be at the next meeting and the meeting after that. And they're going to want to go in quick succession because the job market is struggling right now. When you actually look at the numbers, they're struggling. And then you also have to remember that the most recent jobs report, that 73,000 job number, that's likely going to be revised, and it's very likely going to be revised down, not up. So without risking making this video way too long, I think my puppy wants to play and go outside, and I don't want to drag this out. That's what happened today. You basically have a virtual guaranteed chance that the Federal Reserve is going to cut interest rates in September. I hope this video was informative. I hope it was to the point. Usually I edit this and make it all, structured, but I've been enjoying just having this conversation with you guys. So if you like that, let me know in the comments. If you haven't subscribed, please consider doing so. It helps the channel tremendously. It's very difficult to grow here on YouTube, but I love this stuff. I love sharing what has been my expertise for over a decade at this point with you guys. So with that said, I hope you have a fantastic rest of your day. We will see what goes on at the next Federal Reserve meeting, and I will see you in the next video for whatever crazy economic news we need to discuss. With that said, have a fantastic rest of your day. See you in the next one. Take care.